So here is the PPI data. Let's take a look at this. Year-over-year growth on PPI, 3.3 versus 3.5%. Previous was 3%. So again, the market expected 3.5. We got 3.3. Core PPI was 3.5 versus 3.8 expected. Previous was 3.4. So notice we did go up. We went up from 3 to 3.3, 3.4 to 3.5, but it's lower than expectations, meaning inflation is going up, but it's not going up as much as the market expected, which is basically why we're pumping right now. Month over month, the market expected 0.4. We had 0.2. And then core on the monthly, the market expected 0.3. This is the actual reason I think we're pumping. And we had a 0.0% gain on core PPI. Core PPI is the one that really matters out of everything else. So, I mean, there is an argument. There is a really, really good argument that the reason we pumped last night was because someone knew, aka Wall Street, and they started buying the crap out of whatever dip there was at 350 because they realized, wait a second, if we're not increasing on core PPI, that means CPI, which I'll be live early tomorrow, given it comes out at 8:30. That one's probably going to be better than a lot of the expectations. And if CPI is better, given core PPI was better, I mean, what if we don't increase by 2.9% tomorrow? Or what if we do, but what if core CPI is lower than expected? If that's the case, dude, this inflation narrative that the market's been running with for the past couple of weeks, which is why the 10-year has spiked so much, maybe it's not going to be as prevalent. Now, granted, the bond market, there's still being some vigilantes, and they do not think that this is strong enough to buy a bond. So as you can see, the 10-year barely down, right? 10-year is not really moving too much. I think the 10-year, if it sees a decrease in CPI or a meaningful stabilization of CPI, then there's going to be a possibility for the 10-year to start coming down tomorrow. PPI is important. CPI is really important. And so I think tomorrow is the Super Bowl when it comes to that 10-year going down. The dollar is slightly down, 33 bips. Again, this thing needs to be down a lot more than where it is right now, but it is down, which is nice. And that is helping some of the international stocks that we're seeing right now. Someone says, yep, I've seen the documentary. Yeah, I highly recommend people watch the, I think it's on PBS on YouTube, the Steve Cohen .72 documentary. You just type in those words, it'll pop up. And they really do a good job of explaining, like in layman's terms, how Wall Street gets information before everybody else. And it makes sense. Wall Street's managing hundreds of billions of dollars. Like, of course, there's going to be monetary incentives for them to get the information before other people. Is it illegal? The documentary actually does a good job by saying it is kind of illegal, kind of not illegal based on different loopholes. Like, you're allowed to get certain types of information as a hedge fund, as a money manager. It just can't cross a line. So then the question becomes, how blurred is the line? And if the line is blurred enough, you can't get prosecuted for it. And as a result, you can trade on that data. And it seems all but inevitable. The data around PPI leaked yesterday at 350. And that's why it ended up going up right into the close. Not bad. Not bad for PPI. Is this a good sign for CPI tomorrow? I think so. I think if the market was bearish CPI, they would not be excited about the PPI data today. So it seems like they are still saying, all right, if PPI is good, then CPI should also be good as well.